Good morning, everyone. Welcome to another episode of Tax Tips in a Minute with Mike and Ryan. I'm Ryan.
I'm Mike.
And today we're going to talk about the One Big Beautiful Bill Act that was signed into law on July 4th, 2025. We're not going to talk about the entire bill. We've addressed that in a previous video, but I received an email from a client right after the Big Beautiful Bill was introduced, and this client was asking me about tips on overtime and how that's going to work and what this no tax on tips piece of the legislation entails. So Mike is an expert in all things related to tax on tips, so I have asked him to kind of give us an overview of what this means.
So the no tax on tips provision in the One Big Beautiful Bill provides a new deduction. It's going to be effective for tax years 2025 through 2028. What it is employees and self-employed individuals may deduct qualified tips received in occupations that are listed by the IRS as customarily and regularly receiving tips on or before December 31st, 2024. And they have to be reported on a Form W-2, Form 1099, or another specified statement that's provided or furnished to the individual or reported directly to the individual. Qualified tips are voluntary cash or charged tips received from customers directly or through tip sharing. So both cash and credit or Venmo or other payment app tips are going to be qualified. The maximum annual deduction is $25,000. But for self-employed individuals, the deduction may not exceed their individual's net income from the trade or business in which the tips were earned. So for example, if you're a hairstylist and you receive tips, you're self-employed, so you report on a Schedule C on your Form 1040. If your net income was less than $25,000, your deduction for tips is going to be capped at that amount of your net income. And the deduction also phases out for taxpayers with modified adjusted gross income over $150,000 or $300,000 for joint filers.
Okay. So which taxpayers are eligible for this deduction? Who exactly is eligible for the deduction?
This deduction is available for both itemizing and non-itemizing taxpayers. I saw a few early commenters online suggesting that this was only available for those who itemize their deductions on Schedule A, but that's inaccurate. This is available for both those individuals who itemize and do not itemize. But self-employed individuals in a specified service, trade, or business, also known as an SSTB under Section 199A, are not eligible for this. And employees whose employer is in an SSTB also are not eligible. Now, if you're going to be eligible for this, you must include your Social Security number on the tax return. And if you're married, you need to file jointly, married filing joint status, in order to claim this deduction. If you file married filing separate status, you will not be eligible for the no tax on tips deduction.
Okay, so you talked about at the individual level. Does this affect employers? What do employers need to think about or take into account with this no tax tip?
Yeah, it definitely affects the employers as well. The employer or other payor is going to need to file an information return with the IRS, probably the Social Security Administration as well. And they're going to have to give the statements to the individual showing what the amount of cash tips received were and what's the occupation of the tip recipient. So this is going to cause changes to the Form W-2, probably to a Form 1099. It's going to cause changes to your payroll system so you can track the cash tips received, whether or not they're qualified tips, and all this information that you're going to need to flow through the system into your W-2s or your 1099s at the end of the year. Now, very importantly, This was effective for tax years beginning after December 31st, 2024, meaning this is effective January 1st, 2025. So this has already been in place now, retroactively back to the first of the year. So, that's probably going to cause some issues for the employer tracking of tips that have already been earned and paid so far in the first 6.5 months of the year. So the IRS is going to provide some transition relief for tax year 2025, both for the individuals claiming the deduction and for the employers and payors subject to the new reporting requirements. So there's obviously more information to come here from the IRS, from the Treasury Department, but this is a big change and it's already effective for this year.
Okay. Well, that's great. I mean, the deduction is great, but as you can tell, even though it sounds simple, there's a lot of complexity that's going to follow.
Exactly.
And with everything else in this bill, a lot of it sounds real simple and fun and all that good stuff, but there's a lot of complexity, a lot of new guidance that will assuredly come out in the near future. So just keep that in mind. If you're an individual that receives tips or an employer that employs an individual that receives tips, there's a lot to think about. So, if you have any questions about it, any concerns, you want to discuss it in more detail, please let us know. We'll be happy to help.